With the Federal Reserve ready to raise interest rates, laddering can be a good bond market strategy. Bill Belden from Guggenheim is joining us today to talk about that. Welcome back to ETF Exchange. Thanks for joining us, Bill.
Greg, great to be with you.
First of all, I wanted to ask you what you're hearing out there from advisors and investors about this marketplace with respect to rising interest rates, stocks at all-time highs. What's the sentiment that you're hearing?
Well, it is a really dynamic time, both on the equity and the fixed income side, and advisors are really taking this opportunity, I think, to revisit client portfolios to position for what they expect to see happening in the marketplace going forward. You mentioned rising interest rates on the horizon, seemingly not so much a matter of if, but rather of when and by how much.
Right.
And one of the great things about the ETF business is that advisors now have a set of tools that they can utilize to position client portfolios more effectively than they have perhaps in the past in the face of this impending rate increase environment.
Yeah, in fact, we've written in Investment News a couple of times about laddering as a strategy to structure a portfolio to deal with the rising rate environment. Can you tell us a little bit about a laddering strategy and how that works?
Sure. So it's interesting because what is old is new again, seemingly, as it comes to laddering. And so basically laddering is very simple in terms of providing a portfolio with exposure to consecutive maturity years, weighted usually on an equal weight basis, but you can alter that weighting methodology. And as the fixed income exposure matures, then you take those proceeds and you reinvest them at the later dated maturity. So you keep stepping up the ladder as time goes on. And what the benefit of that has proven to be is that it really helps mitigate that risk and the uncertainty around that risk associated with rising rates. As a matter of fact, there's some research that was recently published by Crestmont that evidenced the fact that since 1900, so over 100 years, that any bond portfolio that was laddered in treasuries over a 3, 5, and 10-year period had a positive total return.
Wow.
So when you're trying to mitigate against that risk, it's great to be positioned to do so, and laddering helps achieve that outcome.
Okay. Now you mentioned the toolbox, advisor's toolbox, and having more tools to help them structure these portfolios. Tell me a little bit about what you guys at Guggenheim have. This bullet shares is the product. How do those fit into that sort of structure?
So our bullet shares suite of defined maturity ETFs offer these products that have a finite date to their life. In other words, they mature at the end of each calendar year. So we right now have a suite of 10 investment-grade corporate bond bullet shares and 8 high-yield corporate bond bullet shares maturing between now and 2024 on the investment-grade side. And the beauty of that is as rates go up, principal values typically drop in a bond portfolio, right? But if you hold them to maturity and absent a credit event, you get the proceeds back. Well, basically, the bullet shares wed the best aspects of owning a bond fund or bond ETF with owning an individual bond, and that's how they're really ideally positioned to deliver that value to clients.
Okay. So my last question, Bill, is so you have this suite that goes out to 2024, as you said. So as an advisor is thinking about using a laddering strategy and maybe bullet shares, but either way, they're thinking of building that into their client portfolios. Is it a long-term strategy that they can use for an extended period of time, or is it simply during the time period when the Fed is raising rates and who knows how long that may last, but is it a long, short, medium-term strategy?
I think the best solution or answer to that question is really client-driven and what is the need that you're seeking to achieve. If you're really trying to position a portfolio for a rising interest rate environment, you have an outlook, if you will, for how long that period is likely to exist. And whether or not you want to put on a short-term ladder of 3 years or go out to 10 years, the bullet shares are constructed in such a way, and the laddering is available to construct in such a way that you can meet multiple needs depending upon the client.
Okay, perfect. Great. Excellent. Well, thanks again for coming by. Appreciate it.
Thank you very much.